You know Monopoly, the board game, and the situation where a market is controlled by a few. But a different and, I promise, real word, monopsony, might explain why wages have been growing so slowly for so long. In areas with only a few dominant employers, monopsony power. The further the concentration, the dots to the right, wages don't grow much because workers lack bargaining power and employers don't need to try as hard to lure them. A new Treasury paper suggests wages were 1% lower over a 4-year period due to the impact of that concentration on almost the entire Australian workforce. Assistant Treasurer Dr Andrew Lee says it's more evidence of a lost decade of wage growth, contending that after you account for inflation, workers earned only $18 per week more in 2022 than they did in 2012. Inflation is biting in Germany too, where new data showed a big rise and scared markets in Europe. A lot of bouncing around on our currency markets. You'll get 108 Kiwi cents for an Australian dollar at the moment. A decade ago, you'd be getting 125. Iron ore leapt to 126 US dollars a tonne. Analysis from ANZ says that'll be 130 US dollars shortly, but then down to 100 by the end of the year. So big impact here. And it showed up today as iron ore miner BHP rocketed while our big banks all took a bath. Despite the heft of their near monopoly, the stock market ended the day flat. And that's finance.